Welcome to Momentum Monday. Today is December 5th, 2021. Howard, what's going on? How was Miami?
I brought my dog on, who's doing better this year than me.
Is she on Bitcoin? How is her crypto portfolio doing?
My dog this is the Solana dog.
She only owns Dogecoin, right?
No, Solana. Oh, Dogecoin. No, she's a Shiba coin dog. Okay. Yeah. So have you been kidnapped and taken to a nice place?
Yeah, exactly.
For years, I thought you were just locked in. People thought you were locked in your room just working for me. And at least people now know that it's like the Alibaba guy. Who's the Alibaba guy that they've been holding hostage?
Oh, yeah, I forgot his name.
Lindsay, say hello to Ivan.
Yeah.
Oh, she's a good dog. Okay, tell me how much money I've lost this week, Ivan.
I don't know what you own. So if you own Alibaba, it hasn't been a good week. So I mean, in the past week or so,
oh my goodness, wow.
Let's say the past 3 to 4 weeks, it seems that there is a repricing of risk assets as the market is adopting a new narrative that the Fed is already not thinking that inflation is transitory. The Fed is starting to worry about inflation. In fact, it seems that the Fed is worrying more about inflation than about the virus. And now, before, when a new COVID mutation would show up, that would be considered something positive for tech stocks, at least, because it would mean that Fed will continue to provide liquidity. Nowadays, the narrative has changed to the Fed is worrying that any new COVID mutations would mean supply chain issues, which means more inflation. So basically, the whole narrative is revolving around inflation threat. As of right now, things can change, but and this is why I think that we're seeing a repricing in risk assets. It's not just highly valued software stocks or reopening stocks. It's also, we see that in crypto, we see that all around, even in mega cap tech, we're starting to see that. I mean, China is completely different. It's basically in the bear market. So last week, for the first time in a while, we kind of saw a little bit of more significant pullback in QQQ, obviously still above its 50-day moving average, so not a big deal in the big picture of things.
Mm-hmm.
But definitely we're seeing some selling there. Look at those huge volume bars. So definitely some distribution going on, which is not bad. I mean, it's good, all of those names to pull back once in a while so you can get better entry points eventually so they can build new bases.
Yeah, it's an interesting point about the inflation. I mean, maybe it's becoming a political point at this point. So that's a good point.
I mean, definitely money has been kind of hiding in treasuries. So these interest rates are pulling back, but then anything else?
It's still the interest rates. The interest rates should not be pulling back at this point. Like, it's really, really dangerous behavior in the market. I mean, we've had a crash. Like, it hasn't affected Procter & Gamble, and it hasn't affected Apple, and it hasn't affected semiconductors because what do I know? But there's been a crash in a lot of the cloud names, and I think Apple won't be able to hide out much longer, especially as the drumbeat. Once you start complaining about inflation and all this stuff, it'll just start getting back to like blame China. Interesting. So the ARK stuff is getting hammered. They're going after the crowded names. You can't just blame Kathy. That's the media and people chasing returns. We saw this was going to happen in February. She was on the cover of every magazine. Go back to a weekly here. If you go back to a weekly, she was being anointed, by February. She was just on every interview show. So she's doing her job. the money flew into her trade. She's sharing her trades publicly. Everybody's copying her portfolio. And bing, bang, boom, underperformance from the crowded stocks happens, right? If we go back and look at Zillow, Zillow went from 20 to 200. And I remember selling it on the way up, and now it's just back down. We've kind of come full circle. So that's, considering everything, there's just kind of been no movement. But it's interesting. Where's the strength, Ivan? Where are you seeing the strength? Where are people hiding out besides?
Other than defensive sectors like consumer staple, Apple, which is defensive play as well. Semiconductors, that's the only high growth industry.
Interesting.
It's still holding well.
But it won't. I just don't think it will. If the markets, we can see 10, 20% catch up corrections in these if the selling continues.
Yeah, I mean, obviously, this is probably the best performing big sector year to date, semiconductors, and a lot of those names, they're up 40, 50%, even the big ones like Applied Materials, because of the big rally earlier in the year. But definitely, these are holding the best. And as you said, if the correction continues, it's not gonna last. But as of right now, they're holding the best, definitely looking amazing. Like many of them are just building new bases.
I mean, look at that. Look at the earnings. These were NXP. Look at these earnings. 18 cents to $12.
So definitely.
Historically, this is when they raise capacity, and then this whole industry will crash. Same thing with housing. The housing price is up 19% this year. And of course, the stocks look strong. Housing prices are up 19%. But then they'll build inventory. And these are cyclical, businesses, and we've seen what happened when they last looked good in 06, 07, 08. But anyways, what do I know? These could be strong buys for all I know. They're just.
I mean, if we really zoom out a lot, like just for the past 5 years, the Qs are up like 300%, semis up like 700%. So it's been quite a rally. Like it wouldn't be surprised if we have the occasional even 20% pullback. This year has been relatively very low volatility, very very light pullbacks. We have forgotten that markets tend to correct at least 10%, 50% once a year. We haven't seen that in a while. So
but financial strong. I mean, the Dow's having a good year. The S&P's having a good year. So where is that strength coming from? Energy? Doesn't have enough in the index. Is it financials?
If you look at year to date, yes, energy, financials, industry.
I guess Apple, it's the biggest market cap, and Microsoft. So those have really helped. But underneath the surface, it was like 20% of stocks in the NASDAQ 100 hit 52-week lows. That is a big number. So, and then you throw in Latin America and China in the toilet. It's been one of those that just owning the indexes has just been magnificent this year. If you own the QQQ or the spiders, congrats. The question is, what do you do? I think you stay with the trade until they're broken. The QQQ over the SPY, but I think a lot of people are hiding out in Apple, like I said last week. So I don't know. I'm kind of like.
This could work for the past 10 years. I know maybe this won't be the case for the next 10 years, but we'll see. Every year we think that now is the time for active management to outperform and the SPY.
Yeah, I mean, what I've seen in my portfolio is like even stocks that looked like they were breaking out. Elastic was one, just broke out and fell 50%. I mean,
that base is experiencing 30, 40, 50%. Basically repricing, as I said, all the risk assets are getting repriced. Even we saw that in crypto in the past few days. It's not like a significant pullback.
No. So again, it's a small, and the whole industry is smaller than Apple, so I don't think you can read much into it. What is interesting though, there's a lot of breakdowns under the surface though.
Yeah.
So I think I'm not sure what to do here. I mean, the financials look fine. So the index trades still look good. The question is, do they play catch up to the downside? Although the financials actually look like they could break.
Yeah.
I think we'll know a lot more next week. But there's some, the VIX up traded up to 30.
Yeah, VXX is perking up. I don't think you can get the VIX here. Let me see.
Don't worry.
Here. Okay, yeah, so yeah, 30 something.
I mean, that's a pretty big move, a doubling in the last month. So there is fear. It's showing up in the interest rates, and it's showing up in credit, and it's showing up, like you said, in sentiment with this tech selling off.
Yeah, the junk bonds have been selling off for a while, way before this latest correction.
Yeah, I think it's a time to be careful still. I mean, generally, historically, coming up another couple of weeks, the second half of the month is strong, but I'm not going to play fancy when some of the juggernauts are starting to roll over. Where's Google?
Yeah, the mega caps are still holding a little bit better than the rest. I mean, and this is the
yeah, but they won't. These things can drop, 400 or 500 points, 10, 12%, and it's just that doesn't break their uptrend. So you got to be really careful of these playing catch up. But then again, at the same time, Zillow was up Friday. Some of these beaten down stocks might just go sideways for a while.
The housing plays were up last week. They were at least held a lot better. That's because interest rates are kind of pulling back right now.
Yeah, it's just who the hell can afford these things? Right? Like, you see prices, you haven't bought a home and you've been successful for a while. Like, I mean, it's expensive to go get a home, and starter homes are really expensive. I mean, why have you not bought something?
I mean, I think the price is too high. So
that's what I'm saying. So the stocks look good. I think you can get fooled, and I think there's a lot of risk in this market right here, and we've seen kind of a warning in the high growth stocks, and I don't think anybody's immune. The question is, what happens to these beaten down high growth stocks if the market rolls over next? I look at the darlings like Cloudflare got taken to the woodchuck, but still only given up 4 months of gains. That was one of the leaders.
This move, it's kind of normal to pull back to its 200.
Oh, I'm not saying it's not normal, but I mean, these things can drop another 20-30% and still be an uptrend. Yeah. So, and we saw that with Upstart. Think about all the people that bought the first few pullbacks in Upstart, UPST, which, is just, giving back what? Well, it's only giving back 6 months of gains, but like a lot of people are buried. And we saw that last year with darlings like Roku.
60% drawdown.
If people went in and bought those first few dips, it's really just rolling over and accelerating out of the downside. So I think you want to approach this now from a position of strength. And I didn't buy anything last week. Where are you at? High cash?
I'm in cash, and I only do intraday trades right now because of the elevated volatility. There are a lot of good opportunities intraday, but I don't really hold almost anything overnight right now because of all the gaps that we're getting. So yeah, I'm defensive with cash overnight and just taking advantage of the day-to-day volatility.
Yeah, I mean, and then you see kind of the gambling stocks and that were huge winners last year, and the brokerage stocks like my Robinhood. It's not just sentiment. I mean, these are very competitive space. Wow. I mean, I wouldn't have predicted that. So again, this is, it's not just one. There's Penn. I just think there's going to be a second shoe to drop on this China thing. It's not just going to stay with Chinese internet stocks. Wow. You can't have this kind of decimation without in such a huge market without it affecting the rest of the world. So I'm more leaning towards there's another shoe to drop, and then we'll have a better picture. But at the same time, the VIX is elevated already, and so many stocks in the NASDAQ are washed out. I'm used to seeing the leaders get taken out, and we're not seeing all the leaders roll over yet. And so I'm just not sure. I'm not used to seeing that.
Maybe all of
So
them.
it's kind of,
So
what's that?
maybe all of them will have to roll over. So we have a tradable bottom. So
Yeah.
the silver lining is that the best investing and trading opportunities period come after deeper correction. We're talking 15, 20% correction in the indices. So if we're lucky enough to see that, it'll create amazing opportunities.
Yep.
And,
All right, buddy. Enjoy Hawaii.
Thanks.
And we'll see everybody next week.
See you next week. Yeah.